Testing, 1, 2, 3, testing, 1, 2, 3. The wane in Spain falls mainly on the plains. The ants in France stay mainly in their apartments. Hey, that actually rhymes. So, good morning. Happy Monday. It's a good day to be alive if you're a currency trader. Markets are moving. News is flowing. It's going to be a great week, great opportunity to make some money. You just have to decide, are you risk on, risk off? That's why we gather here every single day at Forex.Today, every single trading day at Forex.Today. As a community of 13,000 foreign exchange traders, we get together and align our satellites. Cool. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So welcome. I'd like to thank TradersWay.com for being the sponsor of our community. They're a foreign exchange boutique foreign exchange brokerage firm, and they'd like to earn your loyalty and respect. Would you please give them an opportunity by visiting TradersWay.com? Open a demo account, play some trades. You'll see the execution speed is fast. You'll see the spreads are narrow. You will see the swaps are big. And if you ever need it, customer service, world class. They'll roll out the red carpet for you. TradersWay.com. What else is going on in the world? Well, we got some news this week. I thought we would go over the calendar. What do you think? Look at the news events of the week. And then we should cover gold and oil and Bitcoin and dollar and yen. What do you think? Sound like a good morning? Very nice. Cool. So, let's go through the calendar. You should see this all right. Okay. So, did you guys attend the Bank of Japan press conference? They are going to buy unlimited amount of bonds. What do you think about that? Apparently, they have unlimited amounts of money. Well, crypto says, am I the only risk-off guy in the world? Well, right now there is a little bit of a risk-on mood because of the Bank of Japan. Okay? That's all. Okay? Well, you don't want to fight your central banks, right? Also, like for Brad says, that explains my yen losses last night. Yeah, I suppose. Be careful, like when you're swing trading though, try not to like get knocked out of swing trade in one day unless you're like horrifically wrong and the market jumped 150 pips. Don't be a little bit wrong and knocked out for a loss. Okay? When you're swing trading. Okay? So Lucas says, what is the Fed going to do? Well, more interesting, what is Europe going to do? So we'll look at that this week. Okay? Okay? Australian CPI, that's going to be tonight. Great. Whatever. Consumer prices in Europe, or in Germany specifically, great. GDP out of US, not that interesting because it's backwards looking. Fed interest rate decision. So Wednesday is obviously going to be important. FOMC press conference, obviously going to be important. So be around Wednesday. Okay? Okay? Be around Wednesday. Don't take Wednesday off. Thursday. We got German retail sales and unemployment figures. Well, the unemployment side is important because Germany is the largest economy in Europe, so that's going to be a very interesting one. Okay, European GDP and such. Again, not that big of a deal because it's backwards looking. Typically it might be, but I think other things are going to, I think it'll be overshadowed. Okay, European unemployment rate. Okay, obviously overall that's going to be important, but all of this will be overshadowed by the ECB rate decision. Okay, what are they going to do to save the world? ECB monetary policy statement and press conference. Okay. Mixed in there is US PCE. So Thursday is going to be big. PCE and CPI are related. The difference is the methodology in which they manage their basket. PCE is what the Fed uses to measure inflations. Hey, Lucky. Okay, then Canadian GDP. Once again, I think backwards looking, we're more interested in the moment. Right? COVID or not COVID? Morning, Maida. Morning, Kyle. And then May 1st. Is that Women's Day or Communist Day? I forget which one it is. It's one of those days. ISM manufacturing represents about 7% of the U.S. economy, so I think people make a big deal out of it when it shouldn't necessarily be. Okay, so but that'll be a good way to end Friday, because you want a little bit of news to grease the skids, but you don't want too much. Okay, and then check this out on Sunday when the market opens. Right after our swing trading group meets, you're going to get an RBNZ meeting, which will be very interesting. So that might be good for us next week. Oh, March 8th is Women's Day, so it's Communist Manifesto Day, May 1st. Isn't that when all the communists used to strike? I don't know. Sorry. We'll call it Fidel Day. Fidel Castro Day. Cool. Right on. So that's that. What do you stink? It's going to be a pretty good week. Obviously, Wednesday and Thursdays are going to be a doozy. Good morning, Julie. All right. See anything major change here? No. Slight increase in shorts, slight increase in long. No change week over week for euro. Okay. Taking a look at the shorts, slight increase in shorts, no change in longs, so therefore a slight drop in net. So a little bit of, tiny bit of weakness in pound. Okay. See? About the same, slightly less bears. Or I mean bulls. Slightly less bears. Therefore, no change in the net. And also, this data is from Tuesday. Okay. It's a little old. It's not that old. So longs slight decrease in longs, slight decrease in shorts, no change. No net change. Looking at kitty cat. Wait, that didn't change. Did it change? No, that's still... Did it change? I didn't see it change. Let's try it. Put it back to euro. Okay, euro changed. All right. Wow, it's just, it looks a lot the same. All right, looking at long positions, slight increase in long positions on CAD, slight increase in short positions on CAD. No change in the net. So there you go. So there's, on the Forex.Today channel website, we just went through the calendar. We went through the Commitment of Traders report. Very cool, right? So, yeah, that's my cufflinks from last week. I got to tell you, I bought this shirt today, or this weekend. You should see this. So I'm like, right? I'm like, this looks as nice as my $100 shirt, except it's $12. So check this out. So I buy it. I'm like, well, how bad can a $12 shirt be? So there's like a million things holding it together, and there's cardboard and plastic and pins. I'm like, okay, this is a good sign. That's what a very expensive shirt would be like. Then I put it on today. I'm like, oh my God, right? Oh my God, it's like putting on a plastic rain poncho. It's this shirt, at least when I put it on, felt like pure plastic. 100% garbage bag, recycled garbage bag, which then they have printed a fabric kind of look to it. And I'm like, oh my God, I think it's waterproof. It's amazing. I don't know if it's the wave of the future or craziness. It's amazing. Like, oh my God. You would wrap chocolate in it to keep bugs out and stuff. I don't know what the hell it's made out of. So I think I'm going to go back to the, $15 shirts and something instead of the 12. Like, oh my God. It's just funny. Like, there's nothing. I thought, well, maybe there's nanotechnology. Maybe it's breathable somehow, but I don't know. Yeah, so I was at Sam's Club, which is like the garbage dump of Walmart. And you're just like, oh my God, this is so cheap. And oh my God, this is so cheap, right? So I'm like, I look at these shirts. I'm like, these look like nice shirts, but they're $12. I'm like, so I'll buy this one, this one, this one, this one, throw them in the cart, right? And so anyway, so I was putting it on this morning, and totally like a rain poncho. So, yeah, I might go back to the British banker shirts, but it was just funny. So I think I'm probably going to lose 3 pounds today just because I'll be sweating in my shirt. Very, very funny. All right, so what do we see here? Odd up, euro up, CAD down. Pound up, Kiwi up, Swiss weak, dollar weak, yen neutral. Risk on or risk off? So the funny thing is, Jim says, does the pattern run when it gets wet? So I soaked. So I'm sitting there getting ready for the day, getting all beautiful for you guys, and I'm thinking, oh my God, I think this thing's 100% waterproof, right? So I threw water on myself. I'm like, no, it's not waterproof. So anyways, risk on. All right, there is some risk on it, except for kitty cat. Right? No, what do you mean neutral? Swissie's weak, dollar's weak, Yen is more weak than strong. Okay? Everything is up except CAD. So, risk on, except CAD is getting crushed by weakness in oil. There's no neutral. You can't say, what do you mean neutral? What more would you need? Okay? Based on this information. Okay? Okay? All right. So, what would I do if I wanted to take on some risk? Exotics. Can you be more specific? Euros are, USDs are, Turkey. All right, so let's take a look. Also, some of you guys were thinking about maybe some peso this week, right? Right? Okay. So let's go into USD ZAR. Seems like we're close to a top. Go into a 5-minute chart or 15-minute chart. And I am short right here. Why am I short at this price right here? Why did I pick slightly under 19.00000000000000? Sell at roll reversal? No, I wouldn't call that really a roll reversal. Psychological level, definitely part of that. So let's mark it. Here's the psych level. Dang it, I wanted that to be blue. Come on. There we go. Okay. So there's the psych level. Yep. What else? Because of risk on conditions. Yeah, but, I would say it differently. I'd say Bank of Japan accommodative positioning. Yeah, why did I sell on the rising pink boxes? I think I'm looking at this more broadly than a day trade. But you're right to point that out. But I am responding to fundamentals in that moment. So right in here was the Bank of Japan meeting. Okay. Lower low, lower high. Yeah, and you can measure that several different ways now, can't you? Okay. Because remember, if you're going to play the double top, then you have to have a lower high. So this smells like a pretty decent place, right? Well, I would only trade USD South African Rand for the carry. That's the only thing, the only reason I would play this. Okay? There is no other reason. Okay? I'm a loan shark. I'm lending South Africa money. I'm a loan shark. So anyways, I'll leave it there for now. Cool. Someone else said Eurozar. Let's take a look at that one. Okay. Go out to a 4-hour. Somewhere in here, there's either going to be a top here or somewhere near there, right? Currently, based on last week, there's a top right around here somewhere. Drop into a 15-minute chart. Okay. Why am I short here? Well, like we said, this is a top. Okay. Bank of Japan, down, 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 up, up. Gone. Okay. Notice plan B would be something like that. Right? That'd be your plan B. Looks like plan A worked. Okay. And this is a midpoint cycle level, 20.5. Essentially, right? 20.5 is right about here. So we'll see. So if we can get down here, I'll probably move my stop to break even. It's aggressive. Well, it's not conservative, but I wouldn't call that aggressive. Like, look, top, 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 drop. It's not, right? It's not that aggressive. But it's not conservative either. And it's playing off this one idea. You have to understand there's one simplified idea. There's going to be a lower high somewhere, or there's going to be a double top somewhere. Okay. So it's more like I'm picking my lines. So what this trade is assuming now is down for the week, and then next week, I'll make my money next week. Okay. But my goal is to hopefully not have any more risk on this going into next week, or have enough money that going into the big central bank decisions this week, I either get knocked out at break even or I get paid. So like both Europe and the Fed, right? The ECB and the Fed get together and they both say things are not as bad as they were a month ago, but we're still going to do whatever it takes to support our economy. That's all I need, and this works. Okay? So I'm trying to get to a point where I'm lining up the technicals with the fundamentals, and I really don't expect anything. So when a trade like this, what I'm doing is I'm trying to get in trades where either I lose a little bit of money, but I have an opportunity, or I can get in, remove the risk, and try to get lucky. Okay? So I wouldn't call it aggressive. It's just not conservative. And it's one of these things where I'm trying to get the opportunities with the least amount of risk possible. Like, that's not a bad trade, but I wouldn't call it a good trade either, right? So it's not a bad trade, but it might work out really well, right? It might work out really well if this lines up. Okay? And if it doesn't and I get knocked out, I'll always have next week. Okay? These are weekly, by the way, I believe. Yeah, they're weekly, not daily. Okay? So anyways, yeah, so I'm like, yeah. So I'm short at the weekly central pivot point. Is that dumb? If I'm a bear, no, it's not dumb at all, is it? So it's like one of these things, like we talked about it in the trading group yesterday, because, I said pick a bias and just imagine you're truly a hedge fund and a client comes to you and says, I need you to hedge this position for me. And you're like, okay. So they give you a bias, right? Okay. So they give you a bias. So if my bias is I'm going to buy exotics, cool. I got my bias. So if I were to buy exotics, right, would in this case, sell Euro Rand, okay? Would you sell at a retracement like this? You're like, well, yeah, that's a very, 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 very basic swing. So that's all I did. Sold at the central pivot point, right? I sold a rally up to a weekly central pivot point. And if I'm wrong, I'm going to lose a little bit of money. Well, that's how you trade, right? There's nothing too complicated about it. And it's not too aggressive. I'm not making a decision here, I guess is the other thing is what I'm trying to say to you. To me, this is meaningless. If right, I'm simply taking a trade that fits what I wanted to do because the trade appeared. I didn't make the appearance. I didn't make a central pivot there after a triple top. But if my job is to look for triple tops and then anticipate a lower low, lower high, I have to sell it. Right? I'm not looking for perfection. I'm looking for opportunities that fit my bias. And instead this pops up, well, I lose a little bit of money, but I had a decent opportunity here. Okay? So it's just what I'm supposed to do. It'll probably knock me out, and I'll probably break even or probably lose a little bit of money, but that doesn't bother me. Okay? I'm just kind of doing the job. Those are the ones that appeared. Okay? Those are the ones that appeared. So I didn't say, oh, well, that means I'm going to buy South African Rand. I saw that it was falling, okay? Because remember, the market opened here. Okay? Actually, let me do it this way. The market opened here, and it had turned bearish. So I sold it. Right? That's it. The market opened here on Sunday. By the time I went to bed, this was crossing down, so I sold it. My stop was here. Then I moved it here. Now I might move it here. Okay? So, but don't think that this is my declaration of risk on. It's just I'm only looking for risk on trades. One presented itself. I took it. And it probably won't work out, but it doesn't mean anything to me. It's just a trade. Okay? So we can look at this one. Okay? And really, I wanted 7.0. Okay? And so this is sort of mediocrity. I'm short at, I think it was 98. 98. 90, yeah. I'm short at 6.98. Trying to keep it below 7.0. Yes, on a day, I think these are day trades. Let's move this to swing bearish. Oh no. So, yeah, so it's mediocre as well. It's mediocre. So here's, right, that move. And I think I was hoping, oh, I know what I was doing now. Okay, let me show you. This happened on a few currencies. And again, this was something we talked about last night. Here's Friday's close. Here's Monday's open. Sunday's open. Okay, this is Friday. This is Sunday. Okay. So one of the things we talked about was, and let me fatten this up a little bit. fill the gap, continue mission. So that's what I did. Okay. See? That's where it closed. This is where it's open. It opened. So I let it go back to the closing price and I sold it. That's all. Is it a good trade? No. Is it a bad trade? No. So I guess one of the biggest things, where did I put this? Seems pretty high. Did I accidentally cancel it? Oh, it's way up there. How you say in English? Yeah, it's not a good trade. It's not a bad trade. It's just sort of an engineered position. But how about this? One of the things we talked about last night was to expect this big up before any kind of down, which means at least from 6.95 to 6.98, right? I saved that amount of risk. Okay? At least I didn't sell down here, right? I'd rather sell up here than sell up here or sell down there, right? So I kind of saved myself this heartache. And it still might not work out. But it's a trade. That's all. It's a trade. This one, I think you got to go way out. Yeah. Oh, let me show you. You have to go way out. So look, I'm short right here. Okay. And I'll probably try again just above 7.0, try to catch this. But you can see if I get this right, I have a lot of opportunity for hardly any risk. Do you see that? Okay. There you go. So is it this one aggressive? Yeah. Yeah, this one's aggressive. Often what you'll see is a double top of a double top. So I think we'll see a couple more opportunities here. It was just sort of, I just sort of did it. I don't know, maybe I was tired. Okay. All right. Maybe it was a mistake. But you can see that could be interesting, right? Now, Euro Turkish Lira, I'm waiting for like 8.0. So there's a lot of potential to the upside first. But hey, like when a central bank says they're going to print as much money as required, like unlimited amounts of money, I'm like, that could be supportive. Okay. Let's go to some yens. Okay. All right. Now, this is for our bearish brethren, our bearish brothers and sisters. This is what we planned yesterday. Wow, well, that's not bad. Right? That's not bad. If you're bearish and if you're risk off, that's a pretty good trade. one of the things I like about it is it's May's M3. No, sorry, May's central pivot. So there is something going on here. And I think if you're a bear, that's worthy of your attention. Okay? And we also planned it out last night. Yeah, well, that's what we're looking at, degree. Anybody take it? That's up in Asia, down at London Open. Yeah, boy! Anybody got it? There's the line we printed last night. And by the way, we were here when we came up with that plan. This is nice, huh? Up, 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 down, down to the 21, buy. Up, 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 down, down to the 21, buy. Up, 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 down, down to the 21, buy. Up, 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 double top on our line, drop. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. What do you stink? Yeah, I am actually. How are you doing, Highlander? But I got my new plastic shirt. It's going to keep me nice and warm and dry. Man, I'm telling you, I can't figure out if this shirt's like the wave of the future. Like, is this all nanotech? Like, why waste cotton when you can just take oil, which maybe we're not going to ever use for energy anymore, and just make all clothing out of plastic? Highlander's well rested. Oh man. Well, that's good news, Highlander. My kids tell me I'm more like Tony Stark than anybody. All right. Like, I don't know if I'd drive an Audi A8. That's cool, man. Are you drinking your wheatgrass? I think it was Highlander one day. He's getting ready for a webinar. And I'm like, what's he doing? You can see him in the background. And he's like grinding wheat, wheatgrass. He's grinding it like you grind hamburger. I'm like, what's he doing? I'm like, and he's got himself some wheatgrass. Like, that's how you do it, though. Brain food, man. Brain food. Yeah, that's how you do it. I used to laugh at particularly women in San Francisco back in the day in the 90s when Jamba Juice came out. and they would be running around in their spandex. This is even before Lululemon yoga pants, I think. Anyways, so it was just in the beginning when women had entire spandex workout outfits, and you could wear it to Jamba Juice in the morning. And they would pay like $7 for a little shot glass of wheatgrass, right? And then they're like, order this fruit drink. And I guess they thought it was healthy and it fit in with their workout outfit lifestyle. I'm like, honey, don't you realize you're drinking 3,000 calories just because there's like blueberries and blackberries and raspberries and strawberries and boysenberries and right? I'm like, yeah, it's got all of that and 142 grams of sugar and 4,000 calories. Like, honey, what are you doing? This is going to be bad for you, sweetheart. I don't think you need a 4,000 calorie diet, even though it's fruit juice. But anyways. Like, no. It'll keep me trim and thin. Help me lose weight. Like, no. No, it will not. All right. All right. So anyways, there's the beast. Beast looks tame to me. Now, I believe we said Euro Yen looked the weakest last night. I think so, right? Let's go into a 15. And is this daily? I never know anymore. You are not alone. So it must have been a weekly point of view then. Let's go back to the weekly. Swing trading, bearish. Yeah. So we looked at this last night, and I think we concluded that this, if you were going to be a bear, this looked like the best one. And, you know, it's not true. Oh, what's going on? Email who? What? Yeah, if you don't put in the coupon, it won't drop it. And when you put the coupon in, it changes the price. And then it'll tell you it changed the price. Why, what happened? So what am I missing here? Jonathan? So yeah, you must have, yeah, if you didn't type it in, then it won't, right? Well, let's go try it. Hang on. I think it's this. So we'll see. I don't know. Let's try it. Stupid Windows. There you go. COVID-19. Nope. Dropped it to 382. Simple enough. See? Change the price. Remove COVID. 1618. Type in COVID 19. Boom. Changed it to 382. Works fine, dude. That is Chrome. We can try it on this stupid Microsoft garbage thing. What do you call this garbage thing? COVID 19. Boom, changed it to 3A2. Works totally fine, dude. That's Microsoft garbage browser. I don't even know what you call it anymore. All right, so anyways, there you go, guys. If I'm going to tear that down, that offer is going to be coming down very soon. Okay. So anyway, so yeah, this is, you can see there's a trend here inside the bigger trend. Do you see it? Gary says, as risk on, is it best to avoid euro altogether? Typically, risk on means euro goes up. Oh, never, Olin. I got you. Maria also got her. All right, let's go to Kitty Cat. Okay. Okay. This is us last night. We said down, 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 up, up, sell. If you're a bear, if you're risk off. By the way, I think it was 66% of swing traders were bearish last night. So this was definitely on the food chain. Olin says, thanks for this trade. You guys took it? Olin's got it. Oh, and I gave Daniel homework. So you did it for the St. Louis Fed? So you did it, Mr. Morris? Maurice! Yeah. Cool. Jimmy got it too. Cool. So everyone's loving it. Okay. Now, Aussie, we said if you were a bear, was the last one you would trade to the downside. How many people agree with that? We said if you're a bull, you would go long Aussie yen. If you're a bear, you'd go short euro yen and CAD yen, and pound was sort of maybe here, no there. But if you were risk on, the only one you would consider was Aussie yen. How many people from last night agree with that? Okay, this was the one you would not sell. And that's important. So one of the things we talked about, and I emphasized, is that as you go through your analysis, you already know what your bias is, but what you're doing is segmenting the order of which you would trade or not trade. So if you were a bull, you would say, well, maybe pound yen, but it's not that great. Then you look at euro and you start organizing things. And so one of the things we noticed is it opened out a position which tells us up. Tells us hot. It's hot. Okay? You might be a bull, because in that case you are a bull, but it's too high. You're paying too much for the asset. Okay? And so, like, if you were a bull, you should have done the Friday front run. Okay? So then when the market opens and it's up here, like, dude, you can't buy it at resistance. Okay? You can try to ride the 4-hour 21, but you don't buy at resistance. So you should have bought down here if you were really a smarty pants. Or here. Okay? Or here. This is all left over from last week. So we kind of had it like this. But you certainly wouldn't sell it if you were a bear. Niet! Okay? Yeah, guys, keep at it. I get hundreds and hundreds of emails a day, and I'm either trading, doing schoolwork, doing work, and then trying to raise a family. Okay? So, for example, over the weekend I did a lot of homework, but I also spent hours and hours and hours and hours working with a developer on MetaTraders. So we are now developing software where you pay the $5 for the chart templates, and you click a button and it does all the installation for you automatically. If you're MT4, it sets it all up. If it's MT5, it just opens up all the folders for you, pops in all the files in the correct folders and all that kind of stuff, and then you hit restart and you're fired up. Okay? So I'm spending hours and hours and hours and hours and spending tons of money so that your $5 product installs itself, because tons of people are having trouble moving profile files into the profile folder, template files into the template folder, indicator files into the indicator folder. For some reason, lots of people have trouble doing that. They don't understand how to unzip folders. They don't understand that you can't put folders of files into a folder. You have to put the files into the folder. They don't understand. It's not their fault. I'm not saying it is. I'm just spending time and money to do it so that you don't even have to worry. Okay? So that's what I did with my weekend, and I walked to the bridge and had 20 minutes of personal time. That was my weekend. Okay? So then I'm going to send an email to everyone that paid the $5 and say, I just want to make sure you got it set up properly. I got the software. I've updated everything. And when I release this 2.0 of MetaTraders, I'm including the day trading template. With the bias pivots, Wayne? Yes, with the bias pivots. And on top of that, the bullish and bearish templates. Boom, shalakalaka. Drop the mic, walk off stage. Crowd stands to its feet. Yeah. Okay? Yeah. For a $5 product. But if it helps you, I want to try my best. Yeah, no, Johan, I've never said anything like that. Yeah, boy! OCO, is it in that one? So there's two, right? There's the it's called the Forex Traders Toolkit, and then there's the Complete Toolkit. So is the OCO in the basic one? I don't think so. Is it in the complete one? Yes, it is. Okay. All right. So that's one you don't want to sell if you're a bear. Kiwi went with Aussie, which is normal, and then Swissy, whatever. Yeah, so everyone that's already bought it, I'm just going to send it to you in the new version, And it's all, everyone, like, you don't have to buy anything again. I'm just going to give you more and all of that. So it's just considered a free bonus, compliments of the firm. Okay? No worries. Just, well, let me finish the project, then I'll send out an email. Yeah, Johan, I got you. I got your back, dog. Okay. I guess we got to look at energy, right? Degree? Depends when the programmer. He says today, but you know programmers. So, how about this year? Sometime this year. Maybe tomorrow. Okay. Here's a USD kitty cat trade plan. Now notice something. I did this last week, not on Sunday. We did this on Thursday, I think. So we'll see. Okay. This is this week's sell zone. And this is this week's target. And we're actually trying to think bigger and work our way down to the May target. So last week, Thursday, so today is Monday. So we met as a group on Sunday. We met as a group on Friday. We met as a group on Thursday night. And this is what we had planned. And that this would get us to a May low of $1.37. Okay. Right on, Johnny. And Johan's like, hey man, probably May. Yeah. Well, so what'll happen is he'll roll out a version. It should work, and then what? It will install an MT4, but not an MT5. Because you know the geniuses at MetaTrader decided in MT4 there's a template folder and a profile folder. So templates go in the template folder, profiles go in the profile folder. So I believe the geniuses that programmed MT4 said, let's improve profile MT5. So let's make a profile folder, but then stick the template folder inside of the profile folder just to make it different. Just to confuse everyone that doesn't know how to do anything, right? So maybe that's the issue. MT5 people are installing things in the wrong place because for some reason the template folder is not in the profile folder in MT4, but the template folder is in the profile folder in MT5. So I don't know. So maybe the programmer misses that and it installs properly on MT4, but doesn't install MT5. So then he'll have to redo that whole MT5 process. So we'll see. Cool. So anyways, so you see what we're doing here? It's been we're in day 3 of this trade plan, and it probably is a 14-day plan. Cool, right? Yes, John, of course. I would never double dip you. So I will send out an email when it's ready, and I'll say, hey, thanks for being awesome. Here's something I paid money and had developed. You can have it for free. Okay? That's how I roll, bro. Okay. So these are all currencies that are exposed to energy. Okay. Let's take a look at WTI. My, oh my, WTI. Who's going to buy the dip? Who's going to buy the dip? Who's going to buy it? Who's going to make the declaration? Okay. Plan B for bulls would be double bottom. So you're either buying it at 8 or you're buying it at 5. Oh, right on. I appreciate that, Jonathan. Barry's taking it down. So you shorted on Friday where? Off the central pivot? So you shorted it at 12? All right, I can see that. I can see 12. I can see 13.50. Olin's taking it down to 0, huh? Oh, Smasher. Because I'm a global macro trend trader, I like to trade primarily anything with $1 on it, anything with a yen on it, anything with a Swissy on it, because they're funding pairs. I like buying commodity and commodity pairs. So I like Aussie, I like Kiwi, for example. I like trading gold and oil because as far as I'm concerned, gold and oil are special commodities. They're also simply money. So if you're a money trader, like a currency trader, I believe oil is money and I believe gold is money. So if you had nothing in this world but oil, typically you could trade it for food. If all you had in this world was gold, you could trade it for food. So it's very similar to money. And then of course, crypto is some sort of form of money. So it's not in M1, M2, M3, but it's something. So I also, and I do, I probably, so I do some crypto. So I probably have to pay taxes on like 150 grand this year on crypto currencies. So it's something, right? So it's some form of money, I guess, right? So all of that, and then of course carry trading because I'm interested in income. So all of that, right, is based on global macro demand. So for example, did you guys see that Russia stopped trading wheat? They shut it down over the weekend. So that's going to impact global supply of wheat. So someone's going to win, someone's going to lose. You should look into that. Okay? So to me, it's all money. Okay? It's all money to me. Now, where I get sort of sketchy is when it's like pound versus Aussie. And so when I first started trading, actually a couple of decades ago, what I used to do is, because you remember charts, when I first started trading, you had a platform and you had charts. Okay? So the first thing I would do is I'd open up my platform and it just had a page of all these like clicking buttons changing colors. And I didn't find that helpful at all. Like it just didn't make any sense. So I'm like, I don't even know why they do that. So then on a different page, it showed things like overnight volatility, high and low and range and average daily range and a bunch of things. Okay? And I think what I did is I played with a vol. So it showed you like it was up, let's say, plus 3.2, or maybe it was down plus negative 1.8. But I looked at the volatility overnight of every currency. And I created a spreadsheet, and it looks something like this. Euro, pound, dollar, CAD, Aussie, Kiwi, for example, and yen. Okay? But then it looked like euro, pound, dollar, CAD, Aussie, Kiwi, yen. And I would take the vol of euro versus everything. Okay. And right, so euro versus euro is nil, niet. Then I'd look at euro versus pound, and you'd get a number, whatever. And then euro versus dollar, then euro versus CAD, euro versus Aussie, euro versus Kiwi, euro versus yen, and you'd fill in these numbers. Then I'd do pound versus this, for everything. Then I'd do, so I created an indice based on overnight volatility. Okay? So I indexed everything versus everything, right? So I created my index. Every day I did this, by the way. And after looking at this handmade index, I would find something like this. Dollar was strong, yen was strong. Swissy was strong. And then CAD was strong. And then pound was strong. Euro. Kiwi, Aussie. Okay, something like that. And this would be strong to weak. And I'd find on this particular day, dollar was the strongest, yen was second strongest, Swissy was third strongest, CAD was neutral, pound was slightly bearish, euro was quite weak, Kiwi was very weak, and Aussie was the weakest. And I would organize them in this fashion. Okay? But back then, right? Oh, so then I started creating pairs based on what I like to trade. So I would think, okay, I want to sell, do I want to sell CAD dollar or buy dollar CAD? No, because CAD is neutral. So I would take that out of the equation. And then inevitably I'd come up with sell Aussie dollar, sell Kiwi dollar. Oops, that's supposed to be N. Kiwi dollar, sell euro dollar. Okay. And then I'd create, so anyways, at the end of it, I would be selling these three versus dollar, yen, and Swissy. Okay. And then maybe I'd even throw in a pound and all of that as well. So I'd have, let's say, potentially 9 trades. Then I'd take the 9 trades and I would do analysis based on spread. Because back then, like pound yen, a pound yen was like 14 pips. But I could probably get like a pound dollar for 4. Okay? Like no joke. This is what it was like back then. And so I'd do all this analysis and I'd get down to maybe 4 trades. Okay? And then, guess what, guys? I'd open up my chart. Then I would start looking, right? Then I would start looking at technical analysis to time my entry. Okay? So I would spend at least an hour, probably an hour and a half, calculating what I would trade and why. And after 90 minutes of detailed analysis, Then I would open my chart and start looking at technical analysis. So one of the trades I would look at is, instead of pound yen long short, I would look at Great British Pound dollar short. Actually, a better one was Aussie, right? The best one was Aussie. So I'd start and I would look for the down, 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 up, up, and I would short. Okay? But I look for the technical analysis after I created a bias and a strategy. Okay? And from that, every single day, I would track in this book where I printed out my analysis. I printed it out every day. That spreadsheet, that index I made, and then my spread analysis. So I had the index. I'd finish that. Then I'd have to write out all the currencies from strongest to weakest. I'd write it out on this form. Then I'd do spread analysis to pick out which ones I would afford. Okay? And then at the bottom, I had 4 squares, basically something like this. And it would say, so I'd put Aussie dollar, right, for example, and you would see, then I would take the sheet, and I had a leather April, then I'd go, right, and then I'd have Fridays there, and I'd look at Fridays, and then at the end of Monday, I would stick it in Monday, and it would all go into the book, and I would do that every single day. Okay? So the point is, guys, the way I taught myself to trade was I created a strategy first, and look for tactical entries. Meaning, if I was going to sell Aussie dollar, I would only sell a rally up into resistance. And then around 2000, and said, have you ever thought about writing a book? So we negotiated a book deal. I wrote a book, and I called it Strategic and Tactical Forex Trading. That seems logical. That's the story of my life. Written on these walls are the stories that I can't explain. Nice, right? Okay? That's how it all developed, guys. On Amazon. She told me in the morning she don't feel the same about me in her clothes. Seems to me that when I die, these words will be written on my stone. All right. This is a terrible setup. Well, let's add one. No. And I'll be gone, gone tonight. Where I keep on holding on so tight. Nothing in between my ears. All right. La-di-da-di-da-di. Let's go here. All right. So there's the WTI. There's the Lira. Looks like I'm still in it. Oh, I guess we should look at that for a second. I didn't point that out, did I? Basically, sold it at next month's M3, sold it at this month's R2. So yeah, it's aggressive. It's not stupid aggressive. Okay. Gold. Did we do gold? We haven't done gold. Gold. Okay. So I think what we said last night, correct me if I'm wrong, if you're a bear, you were going to sell this off of this. You were going to let the gap fill, and then you were going to take it downtown. I think that's what we had last night. Because, but anyways. Yeah, I mean, that's a big part of it, Anthony, right? Like, here's the thing. I didn't know how to trade. I didn't trade anything before. I quit my job as a venture capitalist. I wasn't like a wheat futures trader or soybean meal floor trader. I didn't flip stocks. I wasn't a stock guy. I walked into Forex because I read it was $2.5 trillion a day, and I'm like, I quit. You know that scene in Wolf of Wall Street where the guy in the restaurant, he's like, you show me a check right now that you make $60,000 a month, and I will quit my job and work for you right now. It was kind of like that. Like, I'm in my beautiful office, 3 windows overlooking the San Francisco Bay from this beautiful skyscraper, downtown San Francisco, south of Market. Got it made. I'm a venture capitalist. I'm happy. I just got promoted. Everything's golden. And $2.5 trillion a day. And I'm like, that can't be true. So I look into it. It's true. I quit. That's basically how it psychologically it happened. Took a little longer, but eventually I'm like, I quit. I'm a currency trader now. So I never knew anything about anything. I didn't even know what the S&P 500 was. Okay? So it was like I started as a pure foreign exchange trader. Never wanted to trade anything else. Like, think about it. If you're a venture capitalist with that mindset, buying stock is stupid. Like, why would you pay $500 a share for something? Like, stupid. Why don't you buy it for 50 cents? Okay? So anyways, I never traded anything before. And so for me to go through and spend 90 minutes a day creating an index of all currencies, simply so I can find out strong versus weak. Well, think of the logic there. Well, all I know is I'm supposed to be trading strong versus weak. So how do I do that? Okay. And then some things were very costly, so I had to measure all that out. And I had a form that looked something like this. Strong, okay? And it looked like this. I used to print them out every day. It was great. So that's how I did it. Then as I learned, I realized fundamentals were important, because just because something was strong or weak yesterday does not mean it will be strong or weak today. And that's where I realized that there was something else behind all of this. So fast forward 20 years later, I do a lot less of this, and I do more fundies first, right? Which is macro. So I'm a macro risk trader, right? And so I do that first and a lot less of this, because all this does is put me like pound versus Aussie. Okay? And a lot of you guys are doing this right now, which is fine, but it doesn't tell you if what worked yesterday will work today. And what worked today, you cannot rely on working tomorrow. And I got frustrated with that, because this worked really well at least half of the time. So as I matured as a trader, I figured out fundamentals, and I had to teach myself economics and stuff like that. Now, luckily, I do have a macroeconomics degree from Harvard University. Boom. So I got that out of the way. But I had taught myself more around the Series 3 test And then I had to learn a little bit about banking, and then I had to learn, and I taught myself macro over time, and I moved from so I call this relative strength, okay, versus macro, and macro leads to trend, and it allows me to be in themes for longer periods of time than just simply say, well, what happened yesterday will probably happen today. Yes, that is true, but it's not consistently true. So I moved from this to this. But all of this is self-taught, right? I'm self-taught. I had no mentor. There was no books. There was no guru. It was just all self-taught. But I still believe that you need that kind of work ethic to figure all of this out. Now, at least I'm pushing you in the right directions and all that kind of stuff. But if you're not willing to spend an hour and a half a day, let's say like I did in the beginning, to figure out relative strength, if you just pop in some indicator and do whatever that says, I think it's the pain. I think it's the time and the patience to do the work, to set all this up, like I did day after day after day. I somehow think that process was one of the major keys to success. Not the information, the willingness to do the work. So now you can throw down an indicator and you can say like, oh, Wayne gave me this on MetaTraders. Okay? And now you can skip all the work and get it done in 5 seconds, right? Well, that's a dangerous assumption. I think the information isn't the important part, because the important part is things like patience and discipline. We know those are two of the most important skills to have as a currency trader. If you don't have that, it ain't going to work. And then we know like the get rich quick versus the long-term business ideas. If you're trying to get rich quick, you will fail. You're not even thinking properly. There's something broken. Okay? Or if you look at your trading like a long-term business that requires skill and investment and plans and strategies, then you will probably succeed. It's just a matter of time and how much money you started with. Okay? So that's sort of how I tiptoed into the world of Wayne as it is now. So over periods, I got better at technical analysis. But you'll see like that book I wrote in 2007, which was published in 2008, the charts still look the same. And you'll go, oh my God. Well, there hasn't been, it's never been necessary to change. So I still use price action. I still use pivot points. I still use the moving average to measure speed and direction of the market and price action, right? All that kind of stuff. And there's some just basic moving parts. Now, some of them I scale back. I don't really use Bollinger Bands that much anymore. You don't really see oscillators anymore. But I look at the chart and I calculate them instantly. So I look at them and I see what's important. But the bigger themes and trading the bigger themes are what's most important to your success. Okay? And that's why you'll see a lot less of pound Aussie trades from me. Not that you can't do them, but I'm looking at bigger themes in the market for longer periods of time. Rookie says, do you need economics in depth though? Well, if you want to understand things like risk on and risk off, yes, you do need fundamentals. If you want to know the importance of changes in central banking policy and how it impact not only the economy, but how the economy impacts a currency and how that currency changes trade, yes. If you ever want to trade other people's money, you will have to know macroeconomics. if you don't understand economics, people just laugh at you. I mean, like, why would you not? Like, how could you argue that you don't want to know, like, that not knowing is better? Like, it just, you couldn't possibly, right? You couldn't, right? Yeah, but again, that's a peasant trade. Okay? It's like making a living. Like, I had a job when I was a kid. My job was to pull rocks out of the ground, anything that I could hold with two hands, and put it on a flatbed trailer that was being pulled by a tractor. So, right? It's just like, that's something, like, is there a lower job than that? Like, I think, right? Like, that is the most basic job in the world, I think. Picking up a stone, putting it on a ledge. Pick up a stone, put it on the ledge. Pick up the stone, put it on the ledge for hours. And by the way, in pitch black, because in the spring and certainly the winter in Canada, there's no sun. It's freezing, unbelievably cold. And that's what happens. The ground freezes and it squirts rocks up onto the field. They're like weeds. So my job is to pick up the boulder and put it on a ledge. And I said to myself, I'm capable of more. Okay? So if all you do is scalp, it's sort of like trying to get rich quick by doing peasant work on a farm. Right? It's like the kid with a $500 car and a $2,000 stereo and $5,000 wheels. It's a mess to even think, right? So there's a better way. And if you do want to make this your career, whether you're trading your own account or trading money on behalf of other people, do you need to know economics? Like, why would you not want? Why is it too difficult? If you're illiterate, it's going to be very difficult for you to become a professional manager of other people's money. So if you took it seriously, you should probably get literate. Now, if you can read and write, then yes, take a college level course in principles of economics, and then take one in macroeconomics, and then take one in microeconomics, and then take one in intermediate macroeconomics. And then take a few finance classes. Okay? So, yeah, like, it's bewildering to me why you would want to be a professional, but you wouldn't want to be educated. Okay? Mike, no, you'd start with principles of economics. Then you'd do both macro and micro. And then you would specialize in macro. Okay? Well, a lot of this, though, Brad, is taught in high school, too. Like, it's not complicated stuff. Now, it does get complicated. Once you're sort of intermediate and advanced and you need calculus and stuff, okay, that's when it gets complicated. For me, it took the love out of it. When you need calculus to do your economics, it takes the love out. But that is not required. So it's really a high school level or entry level college economics. You should understand all of that. Okay? Okay? Like, why not? Why would you not? Okay? So to the guy, to rookie that says scalping is good when you have the tactical capability of entering in at very specific levels that you have identified. Okay? But there's no strategy behind scalping. It's just pure tactics. So the upside is you get really good at pulling the trigger. Okay? Yeah, scalping's for people that don't know how to trade. Okay? Now, like I said though, it will make you very good at pulling the trigger at the price you want to pull. Often it'll help you get away from sort of fear of losses and stuff because you trade a lot, and if you do it right, you get really good. Like if I want to sell at 69.29 and I'm at my price, I can drop into a 1 minute chart and I can get very good at trading that price. But the thing is, I started with strategy first, then tactics. Okay, so scalping is good if you can put some more layers of complexity on there. So if you can have a bias, for example, that you want to buy Aussie or yen, well, that's macroeconomics. Okay. Then you take a little step further. You want to sell this if you're a bear because of your conservative macroeconomic outview. So you're a bear. So now you can open up like 4-hour charts like I had, and you can say, okay, well, this is a top, and I'm looking at not just price action, because what we're looking at in the purple area is price action, but then we can fold in weekly and monthly pivot points, not even this month's pivot points, next month's pivot points. So now you got some sort of strategy and say, okay, because of your conservative macroeconomic outlook, you are a bear, you believe there's still some risk off, you have price action, right? And you have pivot points, both of which are leading indicators. So now you want to get short somewhere around 69.30. You drop into a 1 minute chart and now you scalp because you are awesome on this smaller time frame. And now you scalp. And knowing how to scalp will make this entry process so much easier for you. But instead of making 12 to 25 pips per trade, you're going to make 300 pips per trade. And remember, put it this way, there was a time, and it's been a while now, and maybe we never get back to it, but there was a time when currency traders made their fortunes not by pips, but by income. And if you're a scalper, you never earn income. And you're in it for small wins. You're telling yourself, well, your losses are small, but I don't care about that. Small losses are fine. But if your winners are small, you're walking away from one universal truth. Keep your losses small, but let your winners run. So if you never let your winners run, you're going against a fundamental truth of trading. And even like a 10-year-old knows this. Let your winners run. So you're deciding never let your winners run. Okay, now the next thing is, it has to do with like wealth versus rich, being wealthy versus being rich. And in fact, I had a conversation with my children about this at dinner the other day. I said, you could be a doctor or a lawyer and make $500,000 a year, but you're still not wealthy. You're rich, you have a lot of money, and you make a lot of money. But you can't afford to quit your job, and the only way you make money is to trade your time, your skill and your time. You trade that for money. So you have a lot of money, but you're still poor. Okay? Now, what you want to become is wealthy. And wealthy is where your money makes more money for you. In fact, your money works so hard for you that you make money faster than you spend money. You don't work for your money. And for that to happen, you need income. Okay? You need income. Wealthy people have income. They own stuff and get paid for owning stuff. They own a piece of paper that says This is the title for an apartment building. Okay, so they own a piece of paper. They traded money for an apartment building. And at the end of the month, they get rent from 250 people. They pay the bank their share. They pay the gardeners. They pay the management company. They put a little money aside for a new roof or new windows in the future. And the rest they stuff in their pocket. And then next month, more money goes in their pocket. 5 months later, more money. 6 months, money. 6 years, more money. Just money comes in. They don't even get out of bed and they've already made money. They don't do anything. That's what wealth is. Now, if you're a lawyer making $500,000 a year, if you don't go to the law firm and work hard for your clients and stay up till 2 o'clock in the morning, okay, then you're fired and you ran out of money. That's why they're poor. Yes, they have a lot of money, but they're poor. Now, if you own an apartment building, or in this case, if you own Turkish lira, it's going to pay you $1,000 a year whether you wake up in the morning or not. You want to sleep in till noon? Sleep in till noon, you get paid. Okay? You see the difference? So scalping in of itself, not scalping, but if scalping is the only thing you do, then scalping by definition means you're going to work really hard, you must be extremely precise, and you're going to pay yourself hardly any money. That's why I said it's like a peasant's trade. It's the same as working really hard, lifting stones and putting them on a ledge. It's very hard work, and it doesn't earn much money. So you can pick up stones, put it on a ledge for a living, or scalp in Forex. Either way, you're not going to make a lot of money. You'll probably be the guy with the $500 car and the $2,000 wheels on the car, and you're like, well, look, I'm a baller. Look at me, I'm a baller. Look at these wheels on this awesome... Dude, come on. Come on. So you got to get yourself bigger, which means you need, if you're going to get in trades that last not for 30 pips, but 300 pips, you're going to need a little sprinkle of some macroeconomic knowledge and some bigger ideas for your trading instead of like trying to pick up 20 pips in the next 8 minutes. You're going to do some better analysis and say, well, I can scalp now into this move, which will then come up here, then you scalp into this move, and then it'll come up here, and then you scalp into that move, and then you'll get into here, and then scalp into that move, and scalp in that move, and scalp, and you'll have 10 trades on this going short for the next 5 weeks, and you'll make 5,000 pips, which is probably in 10 trades, which is probably a hell of a lot better than scalping. Okay? And then when you get this right in the idea of like if you're carry trading this north, or you're like Euro Turkish lira south, you're getting this pips plus income. Okay? Okay? And like I said, we'll use this example over and over and over again, I'm sure, but I was short Euro, Turkish lira, okay? And I was short for 10 months. I think it was 1 mini lot, which took $100 of my own money times leverage. And at the end of the 7 months, I made 0 pips and $1,000 interest. So do the math. One standard lot pays you $10,000 a year. It's actually more than that. It's like $12,000 a year. $12,000 a year. And if you're good at scalping, you scalp into the trade, put your stop, and then let it run. And you do nothing. You might work one day entering the trade properly, sweating bullets on managing the risk, and then after on day two, you move your stop to break even. Okay, you understand this? And for the next 10 months, you collect interest and you don't do anything. One standard lot is $10,000 a year or more. Oh, is that right? I didn't even look. Is that right? So they moved the margin? Yeah, true. I agree with that. I have to look into that. Is it really that much? So anyways, a whole lot. Well, actually, it's with the W. All right. All right. So I I created something for school, and I got to wow people with it. So I got to do some writing. I think I'm going to smoke a cigar today. I'm not entirely sure. I'd like to go outside, right? So anyways, I will talk to you guys tomorrow. If you're in my live trading group, I will see you tonight at 5 p.m. Eastern Time. We will plan out Tuesday's trade tonight. Oh, yeah. So, yeah, I don't have a lot of leverage. And even then, I don't even use it, but I have it if I need it. But, yeah, leverage is never the way. So, like, for example, I'm talking with people about buying billions of dollars worth of real estate. And one of the things I'm pitching is low leverage. I said, let me tell you how a fool buys real estate. They go in with no money down or hardly any money down. And then they're loving life. They feel like cash is just raining out of the sky because they're paying interest-only loans. And then they're because of leverage, they have hardly any money down. Therefore, their percentage return is super high. They're like, look at this, we're making 30% a year. This is so great. And then some exogenous shock happens. 10% of people stop paying rent and they go bankrupt. So what I say is we should go in 50% or more cash. So yes, I need $500 million in cash, but we can go out and buy, let's say, up to $1 billion. So that's my advice to investors, whether it's Forex or real estate or whatnot. Leverage is bad. It's helpful. It increases your return percentage-wise. But if things go wrong, especially in an illiquid asset, you could be in a world of hurt very, 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 very quickly. Okay? There's a difference between not being profitable on an investment for 6 months to a year versus losing millions of dollars per month. There's a big difference, right? The difference is one guy went in with leverage, the other with high leverage, the other guy went in with low leverage, and at the end of the bad period, one person is still filthy, stinking rich, and the other one is looking for handouts. Okay. Okay. So anyways, peace on earth. May the pips be with you. Wait. Boom! Peace on earth. May the pips be with you. May your profits be above average. Thank you, Traders Way, for being a sponsor. Thank you guys for being here. Please like, please leave a comment, please subscribe. And like I said, there's in the description below, there's a link to my book. There's a link to Traders Way. There's a link to get the 80% off the video training courses. There's a whole bunch of links to resources below the video here on YouTube. Check them out. Peace on earth. May the pips be